You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. You're familiar with him. He's the senior analyst for the Morgan Report. We're at the Vancouver Resource Investment Conference. David, thousands of booths here. We have resource companies from all over the world. And the buzz I'm kind of hearing, just walking by booths, people are very optimistic this year about investing in the mining business and other resource-based companies.
Well, they really are. You know, there's a cautionary aspect because we've had a couple years of pretty difficult pricing for mining companies, even the ones that are showing a profit and increasing their resources and production. And so people, they're cautious, but they think, this really could be the time to be investing. And some of our big-name speakers here are the same way. They're saying, we feel that after these 2 years that this is a contrarian's dream. So much of the risk has been taken out of the market, and if you do your research and select a company that's really got something going for it, there's a real good chance for you to do very well going forward.
When you've been walking around the booths, anything really catch your ear or eye that maybe you didn't expect to hear this year?
Well, one of the things I'm really surprised about, not only in talking to people in the booths, but also listening to some of the major speakers, some of whom I've introduced here in one of the speaker halls, is that there's a lot more talk about silver. There are people that nearly never even mentioned silver before. They were primarily talking about gold or base metals or whatever. There's some very interesting things developing in the silver physical market, which could really cause some pretty real, what you might call price pyrotechnics some point going forward here fairly soon, perhaps, and certainly over the next few months and into the next year, because the demand is just going right through the roof. We talked one of our earlier House Street discussions here a couple weeks ago. We talked about how the record sales of American Silver Eagles. When I quoted the figure for you last week, it was 3.9 million in one day, and now here we are. Just the third week of the month? They've already sold something like 6 million, almost 7 million, and they're out of stock for a while. So the silver situation with demand in relationship to supply is really getting pretty interesting.
Just average folks I've talked to have said, silver seems like a pretty good bet to me, and these aren't expert investors or anyone who's really got any grounding in that, but they've heard from their friends that, maybe this is the year that, silver is a good thing to get into. It's not all that expensive, and people are just as optimistic for silver as they are with gold now.
Well, and it's interesting, too, because here we have a relationship of about 40-something to 1 silver-gold ratio, and yet the buying is around 7 to 1. So there's a tremendous interest across the board in silver. I myself bought a few silver rounds this morning here at the show. One of the companies that has had one made for themselves is just selling a few dollars over spot. They're very beautiful, and for $3 over spot, I think that's not too bad for a company coin, and so I just bought a few and put them in my pocket.
Coins, you were saying in the past, you have to be careful, though, that sometimes what you're asked to pay for it really isn't the value that you're getting. You have to keep a close eye on kind of the price point and what you can get for it.
That's definitely true, Jim, and what you want to do, you want to try to find your silver as close to the spot price as possible, and you'll never get it for spot generally, but you usually have to pay $1, anywhere from 75 cents to maybe $1.50 per ounce over spot. So let's say silver was $31.50 last week, give or take, and so you would be paying about $32.50 to $33 for 1 ounce. And if you're going to buy American Silver Eagle or Canadian Maple Leaf, you're going to spend $2 to $3 over spot, and part of that is the advertising, and part of it is the cachet, and the part of it is just the cost of marketing. So, but generally speaking, you can buy physical bullion for anywhere from around $1 or so over spot is generally pretty good, unless you have a real demand surge at that particular time. But stay away from things like, Valentine's Day ingots and things like that, where you pay $50, $60 for an ounce of silver, and you lose that premium immediately. If you turned right around and went into a coin shop after spending $55 on one of these commemorative ingots, you would be paid the spot price.
Wow. So you lose half your money right there.
Right out the door, yeah.
Well, I guess it's just like when you buy a new car. You know, it's 40 grand, you drive off the lot, it's only worth 35,000.
Right, you know, and if you have a particular reason like I did today buying some of these company rounds, I mean, I paid $3 over, but I love the design on it, and I've been to the company projects a couple times, and I want to keep them as a kind of a collector's item. So $3 over spot for me is an appropriate price to pay.
It's just like people who invest in art. They say never buy a painting you don't like, because you're going to be stuck with it for a while, and if that's an ugly painting and you hate it, don't do it just because it might be worth more money in the future.
That's really true. That really is true, Jim.
So with all these other people who are walking around, they've got their little swag bags and stuff that they've collected, you were saying the best way to get value out of a conference like this is have some kind of a goal in mind. Do you think a lot of these people are still just, I mean, I call it the lost sheep look. They're wandering around, checking out all these booths, but it doesn't seem that they really know what they're looking for.
Well, some of them are that way, and of course, you know, you walk down an aisle and there's booths on both sides of that aisle, so you have to be kind of a swivel head to see both sides of it, or else come up one side and down the other. But what I did this morning, and I would have done this yesterday, because I usually do it the first day of the conference, but I was asked to do some fill-in work to introduce the presenters in one of the speaker halls yesterday and today, and so I got around this morning after my morning introductions, and I went through the whole list. I mean, there's something like 17 rows here, and I went through the companies that I specifically wanted to see, and I wrote them down, going each of these 100 gradient rows, and I've already visited several of them this morning, and by the end of the day I will have seen all the ones I want to, plus keep my eye open for maybe a story that caught my eye as I was walking by.
Up among the surprise things, I mean, we know about gold, silver, the precious metals. Does a person still have to keep an eye too on the industrial ones like copper and zinc?
Well, definitely, because, you know, first of all, the majority, something like 60-70% of all the silver that's produced is a byproduct of base metal production, copper, lead, and zinc. And so there are what we call pure silver mines, or I should say primary source silver mines out there. There are not even 24 of them in the world, 15, 20 of them probably at the most. And even they have large zinc and lead credits with the silver that they get, but their primary production is silver. So the key is to pay attention to both the base metals, what's going on there, as well as the silver prices. You want to keep your eye on both of those things.
Do you think you were saying tipping point for silver, $50 this year, are we going to reach it or not? Or is it?
It's difficult to say. You know, that you could have something that come out of nowhere which would really drive prices through the roof higher than anybody expected. I really do believe we're going to challenge that level in the high 40s this year, maybe challenge 50. It's going to be hard to punch through on the first time, but the point is, the more times it bangs up against that roof, the more likely it is at some point to break out. And we have this situation now with a very large deposit of about 20 million ounces that was made into the SLV ETF last week, and nobody really knows where that is going and where that came from, and so that's a very bullish development. And the thing is, the silver situation is really volatile now. We could have a calmness here for a little while, or we could have a price explosion in a few days or weeks. We just don't know. But for anybody that wants to take a position, I think they should be looking at starting their physical position right now and not worry about a few dollars downside risk as opposed to maybe many, many dollars upside risk.
Anything else you want to add about what you've seen or heard here at the Resource Investment Conference?
Well, you know, there's just a tremendous number of world-class speakers here, and I learn so much every year. I mean, I introduce some of these people, and I sit down and I'm taking notes like everybody else on what they have to say. And I think, you know, there's David Morgan will be speaking this afternoon, and Frank Holmes spoke yesterday from U.S. Funds. And what I really like about Frank and Rick Rule and people like that is that they're optimists, and even when things are kind of questionable as about where we're going to go over the short term, they hang in there because they keep the big picture in mind, and they look at probabilities, and they know that there are no guarantees in this business, but they also know that if you get it right, if you get a good stock at the right price, the chances of doing very, very well are really excellent. So the price and getting the right company are the key things, and the more you listen to these people and to do your homework and think about what fits for you, the better chance you have to do very, very well.
My guest has been David Smith, the senior analyst for the Morgan Report, which you can find online at silver-investor.com.
You're listening to HoweStreet.com radio. You can contact us at info@HoweStreet.com. I'm Jim Goddard.